Hello, and welcome to Pro Trader Strategies Market Commentary for Thursday, June the 1st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A lot of economic data coming out today in the form of PMI, which is Purchasing Managers Index. Pretty important numbers for what the manufacturing sector is feeling about the economy and how consumers are kind of focusing their buying power, as if you will. So across the pond, we had Spanish PMI came in at 55.4, expected to be 54.9, so slightly better than expected. One caveat with this number, remember anything above 50 is expansion in the economies. Anything below 50 is contraction in the economies. And then we had the Italian PMI come in slightly lower than expected at 55.1, albeit still above 50. Lower than the expected 56.1. French final manufacturing PMI right in line with expectations at 53.8. And we also got German final PMI coming in at 59.5. Then Great Britain's manufacturing PMI came in at 56.7, expected to be 56.5, so right in line with expectations there. Here in the United States, we had ADP non-farm employment change, came in at 253,000 hires, expected to be 181,000 hires, so much better than expected there. And then unemployment claims came in a little bit higher than expected as well at 248,000, expected to be 239,000. Then we also got our PMIs in the form of the ISM, which is the Institute for Supply Management Manufacturing PMI. Again, same thing, above 50 expansion. Came in line with expectations at 54.9, expected to be 54.7. On the flip side of that number, we did get a construction spending number, came in at negative 1.4, expected to be a positive 0.5%. So that number much worse than expected on the at first glimpse. But then if we look back at last month's number, it came in at a negative 0.2%, was actually revised up to 1.1% increase in spending from last month's number. That kind of balances out the number that we saw here with the negative 1.4%. So those kind of balance each other out. So Bear's first blush on that construction number looked pretty bad, but the revisions kind of counteract that. So, and then we also got ISM manufacturing prices paid here in the United States, came in at 60.5, expected to be 67.0, so lower than expected there, lower cost of inputs. Natural gas storages came in at 81 billion cubic feet, expected to be 78 billion cubic feet, so that's higher than expected there, showing a slight build, if you will. And then we also got crude oil inventories, actually a major drawdown of 6.4 million barrels, expected only to be a drawdown of 2.7 million barrels, giving the bulls a little bit of room to the upside. We also have throughout the day total vehicle sales for all of the auto sales for all intents and purposes. It's not just a number, it's just kind of being released throughout the day, sprinkled in here and there. But that crude oil number really giving a push to the upside with the overall market, up 54 cents, but it was looking pretty negative on the day until that number came out. That means my $47 a barrel is probably out of the cards for the near future anyway. I think that the bulls are going to grab onto this drawdown going forward. So we could start to see this push a little bit higher, which is good for my XOP. I have an XOP trade on. If you remember, I was short some puts that were getting tested with this move down. XOP actually accelerated to the downside even more so than crude oil but now we're starting to see a little bit of pop in that. So I've got a little bit of breathing room now. Then on to gold futures. Gold coming off, down by about $9 on the day as people are flooding into the equities in a sense. E-mini S&P's kind of leading the way, it looked like this morning. We'll have to see if anything's changed in the last 5 minutes. But anyway, bonds again down on the day by 17 ticks. Fed fund futures pricing in about a 70% probability of a Fed rate hike coming up here in the next couple of meetings. There's about a 70% chance for one of those two meetings to get a 25 basis point increase in interest rates. So bonds pricing that in and continuing sideways. Pricing that in is what I've been talking about. I don't really see bonds moving too much higher than here. And putting my money where my mouth is, I'm short TLT. So short deltas in TLT anyway. This is the Dow Jones Industrial Average, up about 71 points. It's really just kind of ratcheting its way up to the top, very near the overall highs of the day right now in the Dow Jones. NASDAQ also in positive territory, up by about 13 ticks on the day. We don't have to say a historical high today in NASDAQ, but on the E-mini S&Ps, we have a historical high of 24.23 right now, and we are right at the highs of the day as we speak. Right now it's basically printing the highs, so and there we go, another new high as we're going along here. 24 23 and a half. So as we'll be able to see on the E-mini S&P breakdown of the 15-minute chart, economic data came out. This was the down slosh on that first construction spending move, making it look pretty bearish. But then when everybody started peeling back that onion and seeing the revisions, the last month's number, it kind of pushed a little bit higher. ISM manufacturing in line with expectations. Nobody really cares about the prices paid. Drawdown in that crude oil inventory added acceleration to the upside as people are spending, maybe driving, going to the malls and spending money is what that usually looks like. If you're spending money on gas and things of that nature, or manufacturing spending money on the inputs to manufacturing, that signals a robustness in a sense in the economy. So all right, so a couple of things that I have done with Tesla. If you guys remember, in Tesla I had on a synthetic long, or actually a long call spread for the most part, where I was getting into this right in line with my rules. So with Tesla, I ended up going into this with the July, and I originally had bought the 305 calls and sold the 330 calls. Now I talked about this yesterday. Even though it was blasting through my short calls, I wasn't able to get that 50% of my max profit in there. So originally paying $12.51 for that, I could look to be getting out of this somewhere at about $18.75, $18.50. I was working 18.50s yesterday all day. It just never really got close. Today I decided I was going to put in another order at 18, like 38 or something. Fat finger error. I changed it, went in and manually changed it to an 18.28 or something like that, 18.38, and ended up somehow firing that thing off and got filled at $17.28. So about $1 short of what I really wanted to have for that target. But at the end of the day, sometimes you make mistakes and they work out pretty good. I don't know if that's the case here, but I ended up fat fingering getting out of my Tesla about $1 early. Anyway, XRT blasting to the upside today. I was getting tested on this. Remember, I thought it looked like it had bottomed. Come down, a lot of these retailers started to turn it around a little bit. So in XRT, I had sold some puts in there when we had higher implied volatility percent above 30 anyway, and I sold the June 39.5 puts, and I originally sold them for 30 cents, bought them back this morning for 13 cents with that big move to the upside. So you can see I was not really tested on it, but it was getting down there, and it was a loser type of trade. This is the low, so that's why I picked that as 39.5, is because I figured that acted as a nice support before. It would act as support again, but we didn't get quite that low. We got some tweezer bottoms here, so movement to the upside today allowed me to get out of that. Plus, you can see we got some volatility contraction in XRT also working in my favor. Then on to Procter & Gamble, another trade that I added today. This is one of those. It looks like pretty much like a bearish engulfing pattern here. Came up and tested the 50-day moving average yesterday, kind of repelled off of that today, bouncing down lower. This 200-day moving average is looking like it might act as support, but with that engulfing pattern, that's just adding a little bit more bearishness. Markets moving to historical highs in a sense, the NASDAQ pushing higher. People are kind of pulling out of these consumer staples, and sometimes the trend is your friend, despite the fact that I don't think Procter & Gamble is probably going to be valued lower, but when people are sector rotating, they get beat up. So with this, I went into the August to get that further duration, give me enough time to be correct on this, and bought the August 90 puts and then sold the 85 puts in there for paid $2.48, so slightly less than 50% of that width of the spread. So playing it for a bearish trade down to hopefully come down and test this value area low. We need to break that area there. So although it's covered that gap, very well could want to come down into this area, and hopefully in the next few weeks, if you will. All right, and then IWM. This is another one. Yesterday's bounce lower. IWM is the Russell has not been participating in the rally like we've been seeing across the board in the NASDAQ and the S&Ps. And with these markets moving higher, I think the IWM is going to have a push to the upside. Plus, by covering that Tesla trade and adding a couple of other trades in there, I was getting pretty short delta because that Tesla trade was a long delta play. Getting pretty short deltas, and with the markets moving higher, I figured I'd throw something in here. Did a risk reversal based on the rules that we talk about in the daily market commentary, in the webinars on risk reversal. I did get a little bit more aggressive with this IWM. The reason being the all-time high being up there at around 142-ish, let's say, and don't know that it might get all the way up there. So I got a little bit tighter on this spread. If you remember on the webinar, I'm talking about 25 deltas. This one I went in a little bit tighter and made it about a 70 delta type trade. So I went into the August as well in IWM, and I bought the 140 calls and then sold the 135 puts in order to create a slight credit in that for 12 cents. So I collected about 12 cents for that trade. So anything basically above 135 I should do all right with. So although it went down there and tested that yesterday, I think with this move to the upside today, we're going to start seeing the start move up towards those highs, especially with even the S&Ps making all-time historical highs today as well. So I think there's a little bit of bullish sentiment across the overall markets. All right, so that's about all I got for you guys today. Check out Friday's webinar, which is tomorrow, on risk reversals to the downside. So we'll be able to play some of these, show you ways to find even underlyings that have some bearish sentiment, kind of like Procter & Gamble, and work on building risk reversals around trades like that. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.